Good afternoon, investors. You are now on Kleverstock with me, Ananjaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. The local bourse opened on a positive note, tracking Wall Street's overnight advance after the U.S. Federal Reserve trimmed rates by 25 basis points. Overnight, Wall Street closed higher after the Federal Reserve delivered the expected 25 basis point rate cut. The S&P 500 climbed 0.67% to 6,886.68. The Dow Jones Industrial Average gained 1.05% to 48,057.75, and the Nasdaq added 0.33% to 23,654.16. The back home, the FBM KLCI rose 1.02 points or 0.06% to 1,612.02 at 9:13 a.m. after opening 1.86 points higher at 1,612.86. Berjaya Research Senior Berhad said the overnight U.S. Federal Reserve rate cut, which was widely anticipated, is expected to provide a more supportive backdrop for regional and domestic equities, including the FBM KLCI. It noted that lower U.S. interest rates typically ease global financial conditions, reduce bond yield pressures, and bolster risk appetite, which could in turn encourage renewed foreign inflows to emerging markets. The research house said for Malaysia, the more accommodative external environment may help stabilize investor sentiment following the volatility of late. The key index gapped down before recouping most of its intraday losses to form a hammer candlestick, suggesting potential recovery over the short term. It added that should a rebound materialize, upsides are limited towards the immediate resistance at 1,620 points, followed by 1,630 points. Meanwhile, the near-term supports remain envisaged at the 1,600 to 1,595 points. The FBM KLCI closed slightly lower, holding just above the 1,610 mark, but off the day's low due to late buying interest. It added that Rakuten Trade said it continues to observe a lack of investor conviction amid the absence of fresh catalysts. As such, we expect the index to hover within the 1,610 to 1,620 range today. Among the gainers, Malaysian Pacific Industries rose 30 cents to 32 ringgit and 48 cents. Hong Leong Financial Group added 8 cents to 17 ringgit and 94 cents. Hong Leong Industries gained 8 cents to 15 ringgit and 80 cents, and Vitrox climbed 7 cents to 4 ringgit and 34 cents. On the other hand, Petronas Gas slipped 24 cents to 17 ringgit and 2 cents. Gamuda fell 20 cents to 4 ringgit and 93 cents, while Time and Yinsen each eased 5 cents to 5 ringgit and 40 cents and 2 ringgit and 30 cents respectively. BMS Holdings, which debuted on the ACE market of Bursa Malaysia on December 8, edged up 1 cent or 5.26% to 20 cents with 20.59 million shares traded, making it the most active counter. Moving on to our local currency and foreign exchange. The ringgit opened at its strongest level in more than 4 years against the greenback after the U.S. Federal Reserve Fed cut its benchmark lending rate by 25 basis points. At 8 a.m., the ringgit strengthened to 4.1010 or 4.1075 against the US dollar, its highest level since October 5, 2021, according to Bloomberg, up from 4.1155 or 4.1195 at yesterday's close. Now, back by Amarat Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid said the Federal Open Market Committee delivered the widely expected 25 BPS reduction at its final meeting, which ended yesterday. He said the US dollar index fell 0.55% to 98,671 after the decision, and the meeting pointed to the possibility of further cuts in 2026 and 2027. Muhammad Afzanizam said the Fed may keep rates steady in the near term as it assesses the evolving economic outlook. He said for the ringgit, the upside potential for further appreciation is high, especially as Bank Negara Malaysia is unlikely to cut its policy rate. Expectation of narrowing gap between the federal funds rate and the overnight policy rate would support the ringgit, alongside the ongoing fiscal consolidation drive. He added that Fitch Ratings' latest review indicates confidence in Malaysia's fiscal discipline. He said, as such, the US dollar ringgit pair should continue to trend positively. The local note could even test a break below 4 ringgit and 10 cents level at closing today following the Fed's decision. Meanwhile, the ringgit was mostly lower against major currencies at the opening. It slipped vis-a-vis the Japanese yen to 2.6342 or 2.6388. Fell against the British pound to 5.4896 or 5.4983 and weakened versus the euro to 4.7982 or 4.8058. However, the local currency strengthened against ASEAN units. It improved against the Singapore dollar to 3.1737 or 3.1789 and firmed against the Indonesian rupiah to 245.7 or 246.2. The ringgit also opened higher vis-a-vis the Thai baht at 12.9112 or 12.9382 and was better against the Philippine peso at 6.92 or 6.94. Now for some local economic news. The share of Malaysia's exports to the United States that are subject to reciprocal tariffs has fallen sharply from the equivalent of 12.4% of gross domestic product GDP to 4.6%. This comes as a larger portion of Malaysia's goods now qualify for tariff exemption, which have increased from 46.5% to 62.8% of exports to the US, one of the highest exemption levels in ASEAN. CGS International Securities Malaysia Sdn Bhd analyst Jeremy Goh and Prem Jasingam said the improvement follows Malaysia's designation as one of Washington's aligned partners. They said prior to the signing of agreement on reciprocal trade art, there were already 3 rounds of broad-based reciprocal tariff exemptions. We estimate this to account for 46.5% of Malaysia's exports to the US in 2024. With the new exemptions for aligned partners, cumulative exemptions have risen to 62.8% by our calculation, which is one of the highest ASEAN. The analyst said the tariff extensions have eased significantly from their Liberation Day peak. After negotiations with several countries, the US announced on July 31st adjustments to its reciprocal tariffs, mostly at lower levels compared to those proposed on April 2nd. Within ASEAN, the average reciprocal tariff was cut from 33% to 23%. Malaysia's rate was reduced from 24% to 19%, placing it on par with Cambodia, Thailand, the Philippines and Indonesia, all 19%, while Vietnam stands at 20%. Goh and Jara Jasingam said the episodes of tariff tantrums could still occur, but the broader direction points to de-escalation. They highlighted several key developments, including the maintenance of the US-China truce, the delay in the semiconductor tariff investigation, and recent court rulings that are constraining tariff powers. Still on local news updates. Kereta Api Tanah Melayu Berhad KTMB Electric Train Service 3 ETS3 for the KL Central Johor Bahru route has set to begin on Friday. Is expected to cut travel time to around 4.5 hours, down from the current 5 to 7 hour road journey. With the Southern Electric Line now complete, Malaysia's West Coast rail backbone runs on electrified double track from Padang Besar in the far north of Johor Bahru, which borders Singapore. Johor Bahru is linked to Singapore by the causeway and a second bridge, the long-awaited train service which will pass the historic state of Melaka, which will officially launch on Friday. KTMB expects strong demand for the service driven by the year-end school holidays and rising cross-border traffic from Singapore. The 30% launch discount for the first 5,000 passengers has already been fully redeemed. Meanwhile, the Straits Times reported that just before dawn today, the new electric train service from Kuala Lumpur to Johor Bahru departed Kuala Lumpur railway station on media preview run. The train is bound for Kempas Baru station in Johor Bahru, where the region of Johor, Tunku Ismail Sultan Ibrahim and Prime Minister Anwar Ibrahim will attend the launch of the service. In Kuala Lumpur, the platform was bustling at 6 a.m. as officials from KTMB and the Transport Ministry boarded the train. The service marks the completion of the long-awaited 192-kilometer Gemas-Johor Bahru electrified double-track project. The 6-coach train, with seatings for 312 passengers, features 4 toilets, plug points at every seat, a dedicated coach bistro serving meals on board, and prayer rooms for Muslim travellers. Originally launched in 2017, the 192-kilometer extension was expected to be completed by October 2021. However, construction was delayed over 3 years due to COVID-19 pandemic and challenges in land acquisition. From December 12, 4 existing KL Central Kluang ETS services will be extended to JB Central, offering passengers in the southern state a direct rail link to Kuala Lumpur. We'll now take a short break, but don't go away. We will return shortly with corporate news development. Welcome back to the Midday Roundup. Let's continue with corporate news developments in Malaysia. EcoWorld Development Group Berhad, EcoWorld Malaysia earnings for the financial year 2025 exceeded expectations from both CIMB Securities Research and Consensus. The developer posted a fourth quarter 2025 core profit of 126 million ringgit, bringing financial year 2025 core earnings to 421 million ringgit. This is ahead of CIMB Securities' expectations at 103% of its full-year forecast and 104% of consensus. It said the company declared a 2 cents dividend in the fourth quarter 2025, meeting our full-year dividend per share forecast of 7 cents. Financial year 2026 earnings visibility has brightened following the 960 million ringgit land sale completion in November 2025 and 4.9 billion unbilled sales. CIMB Securities said EcoWorld Malaysia new property sales exceeded 4 billion ringgit for a second consecutive year, reaching 4.6 billion ringgit and surpassing its 3.5 billion financial year 2025 target. Excluding data center land sales 960 million ringgit, the firm noted that core sales of 3.6 billion ringgit still beat guidance. It said Johor and Penang led growth while the central region lagged. The higher financial year 2026 target of 4 billion ringgit underscores demand resilience underpinned by greenfield launches. Overall, CIMB Securities has tweaked its forecast to reflect faster land sales recognition, earlier data center joint venture contribution in the financial year 2027 and expected CAPEX commitments. The firm has revised its financial year 2026 and financial year 2027 core profit forecast by 19%, 10% to 606 million ringgit, 445 million ringgit respectively, and expects a 26% rebound in 574 million ringgit in financial year 2028. This will be backed by full data center lease income and billings traction from greenfield projects with 4.6% of land bank in prime industrial corridors and a deep buyer catchment. EcoWorld offers strategic exposure to Malaysia's industrial push. The firm has raised its rating on the stock to buy with a higher target price of 2 ringgit and 60 cents. Up next, we have some business news update. Burma's Auto Berhad Bauto earnings prospects are expected to remain weak given the challenging operating landscape in Malaysia and the Philippines. Hong Kong investment bank Berhad HLIB said the operational landscape in Malaysia is expected to remain competitive given the entrance of Chinese original equipment manufacturers OEMs with attractive price points. Nevertheless, the firm noted that Bauto's newly launched Mazda models have gained renewed market interest, resulting in improved sales volume quarter on quarter. It said Bauto has also entered into an agreement to discontinue the exclusive distributorship of Kia models in Malaysia, following the restructuring of Kia Corp to assume the role. Similarly, its Philippines operation has seen continuous competitive pressure mainly affected by aggressive approaches from Chinese OEMs. Bauto has reported a core net profit of 15.8 million ringgit for the second quarter of financial year 2026 and 24.6 million ringgit for the first half of financial year 2026. The results were within HLIB's expectation but below consensus. Overall, the firm has maintained a sell recommendation with an unchanged target price of 54 cents on Bauto. It added, "We expect the second 2H financial year 2026 to be mainly sustained by the new launches and appreciation of the ringgit. Bauto has a net cash of 237.5 million ringgit, supporting a decent dividend yield of 5.7%. Finally, wrapping up, we have major corporate developments and deals across Malaysia. Sunsouria has acquired an additional 41% stake in KL City Gateway Sdn Berhad for 21.46 million ringgit, increasing its total stake to 61%, making KLCG a subsidiary. Astro posted an 80.42% decline in net profit to 9.19 million ringgit for the third quarter ended October 31st, 2025, while revenue fell to 695.62 million ringgit from 749.7 million ringgit a year earlier. Chiding's wholly owned subsidiary Pembinaan Bukit Chiding Sdn Bhd, together with Orasco Sdn Bhd, secured a 13.54 million ringgit contract from Tenaga Nasional for the PMU 132.11 kV Genting Sempah extension. Bautur reported a 57.4% year-on-year drop in net profit to 17.2 million ringgit for the second quarter ended October 31st, 2025, with revenue slipping 14% to 556.5 million ringgit. Last but not least, Gamuda reported a 5% increase in net profit to 215.13 million ringgit for the first quarter ended October 31st, 2025, up from 205.39 million ringgit a year earlier. Revenue declined to 3.84 billion ringgit compared to 4.14 billion ringgit in the same period last year. Now that's a wrap for Midday Roundup with me, Ainujaria, on Kleverstock. Thank you for choosing us, investors. Stay tuned for our upcoming live stream programs.